Dear all, first of all, Than247 would like to thank you for watching the channel. Here is the news today's fluctuations. Impact on gold prices, November 1st, 2025. Hello viewers, welcome to the news today's fluctuations. Impact on gold prices. In today's news, we will update the domestic and international gold price movements, important economic factors, and outstanding military events that may affect the global gold market. Part I 24-hour gold price update. On the international market, at around 9 a.m. on November 1st, 2025 Vietnam time, the world spot gold price stood at 4,001 United States dollars and 10 cents ounce, down about 22.5 to 28.9 USD ounce compared to the night before, when converted at the USD VND exchange rate of approximately 26,345 VND USD, equivalent to about 131.44 million VND, tail excluding taxes and fees. Reputable international exchanges such as Investin.com quote gold futures contracts, gold futures, at about 4,027 United States dollars and 37 cents ounce, while goldprice.org continuously updates the spot price at 4,002 United States dollars and 93 cents ounce. This slight decrease reflects the short-term adjustment of the international market as investors consider supply and demand factors, monetary policy, and geopolitical risks. In Vietnam, in major cities such as Hanoi, Ho Chi Minh City, and Da Nang, the price of SJC gold bars on the morning of November 1st, 2025, remained stable, buying at 146.4 million VND tail, selling at 100. SJC 1 to 5 Chi gold rings were bought at VND 143.6 million tail, sold at 146.1 million Vietnamese dongs tail, unchanged from the previous session. Some other businesses such as Bao Tin Minh Show listed buying at VND 146.9 million tail, sold at 148.4 million Vietnamese dongs tail. Summary of developments. Domestic gold prices were stable, while international gold prices decreased slightly. The difference between domestic gold prices and converted world gold prices was about 15 Vietnamese dongs million tail. Last October, SJC gold bars recorded an increase of about VND 10.4 million tail, approximately 7.5%, compared to the beginning of the month, reflecting strong physical and investment demand. Underscore. Part 2. Economic news affecting gold. 1. China abolishes VAT incentives for gold. From November 1st, 2025, the Chinese Ministry of Finance announced that gold retailers will no longer be able to deduct VAT when selling gold purchased from the Shanghai Gold Exchange. This policy applies to all forms of gold, bars, pieces, jewelry, and investment coins. The reason is that China is under pressure from slowing economic growth and needs to increase budget revenue from the gold market. Impact. Increased domestic gold selling costs may lead to higher gold prices in China, thereby affecting international gold prices. Retailers must choose between reducing profit margins or passing on costs to customers, which may cause a temporary decrease in demand for physical gold. This policy can both support gold as a safe haven asset and create pressure if consumption demand declines sharply. 2. Global central banks increase gold purchases. The trend in 2025 shows that many central banks are shifting from selling gold to hoarding gold, creating a stable demand source and supporting prices. When central banks buy, gold becomes a strong reserve asset, attracting individual investors and large funds, and positively affecting market sentiment. Part 3. Global military upheavals. 1. Sudan. Escalating violence in El Fasher, Darfur. The Rapid Support Forces (RSF) and related armed groups continued to take control of the city of El Fasher. since late October and expanded their repression of civilians. According to The Guardian, thousands of people are at risk of casualties or displacement. Impact on gold. Armed conflicts increase demand for safe haven assets. Although Sudan is not a major gold center, rising geopolitical risks still make investors consider buying gold to protect their assets. 2. Gaza Strip. Israel-Hamas conflict continues. The Israeli military continues to bombard the Gaza Strip, threatening the fragile ceasefire. Thousands of civilians are affected and forced to evacuate. Impact on gold. Conflict in the Middle East increases regional risks related to energy and trade, boosting demand for gold as an insurance asset. Gold may increase or remain high in the short term. 3. Arctic. Russia increases military activity. Russia reactivates bases, increases its fleet, and deploys combat units in the Arctic to strengthen its strategic position related to resource exploitation and important shipping routes. Impact on gold. Gold stability is indirectly supported by increased risk sentiment. Since the region is not yet an energy hotspot like the Middle East, the impact is mainly longer term and more indirect. Part 4. Conclusions compiled and drawn from AI economic expert analysis. 1. In-depth conclusions. International economic experts believe that the current gold market is being affected by both economic and geopolitical factors. China's abolition of VAT incentives on gold is seen as a signal of increased domestic costs, which is likely to reduce physical demand, but at the same time create pressure to support international gold prices. In addition, the strong gold buying trend of central banks around the world is adding stable demand, helping this precious metal maintain its role as a reliable safe haven asset in the context of financial market instability. In terms of military factors, the conflicts in Sudan, the Gaza Strip, and Russia's increased military presence in the Arctic, although having different levels of influence, all contribute to stimulating investors' risk-averse psychology. Experts say that when geopolitical risks increase, gold is often chosen to protect asset value, especially when financial markets are volatile or interest rates are unstable. 2. Conclusions from expert synthesis. Gold prices in the short term may remain stable or increase slightly, thanks to safe haven demand and tax policies in China. In the medium term, if military conflicts continue to escalate or spread, gold may continue to be the preferred safe haven asset, while economic factors such as interest rates and central bank policies will adjust the up and down rhythm. For individual and institutional investors, this is a period of consideration between hoarding investment and portfolio adjustment, as the market is reflecting both upward pressure from geopolitical risks and downward pressure from costs and actual demand. Personal opinion. In the current context, gold is still an effective insurance asset against global fluctuations, but investors should closely monitor major economic policies, inflation data, and military developments to make timely decisions and avoid being passive in the face of short-term fluctuations. Here is a summary of the highlights of the past 24 hours, compiled by Ha Thun Than RCC. If you find the news useful, don't forget to subscribe to the channel and hit the notification bell so you don't miss the latest updates every day. Thank you for taking the time to watch. See you in the next news.